If you plan on buying AMD stock before the next earnings report, here's everything you need to know. At the time of making this video, Advanced Micro Devices, or AMD, is trading at $117.30, and it's actually one of the few semiconductor stocks that were in the green on Monday. It has a market cap of $190.39 billion. As you can see, over the last year, the stock is down closer to 20%, and it's down way more since the peak back in March of 2024. In the last 3 months, this stock is down now 30%. It has a forward PE of 26.1 times, and if we look at what the analysts are expecting this company to do in fiscal year 25 and 26, we can see that they are expecting this company to grow quite quickly, top and bottom lines. At the time of making this video, the average analyst price target sits 51.39% higher than the price we're at today, and yes, in the last couple of days, the average analyst price target did come down a little bit. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Oh, by the way, if you're watching this before 12 p.m. Eastern Time on Tuesday, there is the first live stream with me and Jose Najaro on this channel and on his channel. It's going to be a live show that we're going to start with twice a week, 1 hour each, and then if it works out, we'll increase the cadence. So make sure you, sign up. Just click on the remind button. Thank you. If we look at what the analysts are expecting AMD to report on January 28th, we can see that they expect revenue to grow 10.47% quarter over quarter. EBITDA should go up 23.29%. EBIT up over 17%, EPS on a GAAP basis over 31% growth, and on a non-GAAP basis 18.19%. Looking at some pricing metrics, we can see that forward PE, EV to EBITDA, price to sales are lower than the 5-year mean. The only one that's above is price to free cash flow. That's in the last 12 months. There is a reason for that. We're going to touch on free cash flow in just a second. And price earnings to growth sits at 0.58, which by definition, anything under 1 is undervalued. A couple of things before we continue with the AMD stuff. The 10-year yield in the United States sits quite close to 5%. Back in September, that was closer to 3.62%. The higher this thing goes, the less attractive stocks will be, and that's why we've seen a little bit of weakness in the stock market. One of the other reasons is because, now after the better than expected job numbers, the expectations for rate cuts, especially in the January meeting, are close to zero. They're at 2.7%, which means that 97.3% don't expect any cuts. There are even some people saying that they don't expect any cuts in 2025 at all. Anyways, moving back to AMD. AMD got a bunch of awards at CES. So they've got awards from PC Gamer, Best Processor, Best New Tech for Gaming. They've got an award from Tom's Hardware for Best CPU, from Windows Central, Best Handheld Processor, and Best Desktop, and then the last one from Games Radar, that's for AMD Ryzen 7 9800X3D. More recently, we've seen a big announcement as well here. El Capitan is basically a super computer. El Capitan leverages the AMD Instinct MI300A, integrating 24 AMD Zen 4 x86 CPU cores with 228 AMD CDNA 3 high-throughput GPU compute units, 128 GB of unified HBM3 memory that presents a single share address space to CPU and GPU, all of which are interconnected in the coherent 4th-gen AMD Infinity architecture. In all, it has more than 10 million accelerator compute units, which enable its exascale performance. And I believe the US now has the top 3 supercomputers on the planet. Moving back to what we've known in previous quarter, we know that AMD works quite closely with Meta. We also know that Meta Llama 405 billion model now runs exclusively on MI300X for all live traffic. AMD works with Meta not just for inference, but for training as well. AMD also said that one server equals 405 billion parameter model. A single server powered by just 8 AMD Instinct MI300X accelerators can fit the entire Llama 3.1 405B parameter model, the largest openly available foundation model. This means organizations can benefit from significant cost savings, simplified infrastructure management, and enhanced performance efficiency. They also told us in a fire chat with a Barclays analyst, when they look at 2025, they actually have a much stronger product portfolio versus 2024. And at the same time, the market backdrop continues to be really good. More importantly, when you look at the 2025, it's just a multi-year journey they're on. And of course, they also continue to invest in software, which has been the biggest, let's say, bearish case when we talk about AMD, especially compared to NVIDIA's CUDA, is the software side of things. They also said that they're acquiring ZT Systems that has also built their system expertise, time to market, and that should be, the acquisition should close early 2025. So overall, 2025, they feel really good about the opportunities ahead, and more importantly, they'll be able to continue to drive the trajectory and the momentum of their business. They also told us that MI300 ramping successfully, and now MI325, they're launching literally this quarter, and they'll start to see revenue in the first quarter of 2025, and then MI350 in the second half of the year. So when we look into 2025, we actually have a much stronger product portfolio versus the 2024, which of course has and still is the big question, right? What will be the AI guidance for 2025? Yes, we know that they started with 2024 with basically zero, $2.5 billion, then 3.5, and now they are going to exceed $5 billion. The market for 2025 is basically expecting AMD to double that number or close to, it's I think $9.5 billion. I don't think that the same trick will work again, right? The next earnings call guidance is going to be, let's say, 8 billion or something like that, even though they think that they might beat it by, I don't know, $2 billion or so by the end of the year. I don't think that trick, putting the bar low to beat it, I don't think it's going to work again. I think they'll have to come out with a pretty good number. That said, I do still think that in 2025, it's not just going to be full focus on the data center side of things, because of course they have other businesses, right? They have the client side, gaming, and embedded. We know that with embedded, there still is some struggles there, some headwinds. Gaming, we should see a recovery in 2025. The year-over-year comparisons, as you will see in just a second, will become quite easier. The client side of things, Intel expects some major movements in 2025, especially in the AI PC segment, as more and more applications come live, as more and more people get exposed to those devices, huge refresh cycle as well. So that segment should help the business as well. And then, we know that the majority of the income will come from data centers. So that's still going to be a focus. But don't forget about all the other side of AMD. At CES, they also announced a partnership with Dell Technologies. The enterprise side of things is extremely lucrative. It's something that AMD did try before, but, they basically dropped it. Enterprise is still a very, very lucrative business that is dominated by Intel. Lisa Su also told us a couple of months ago that, she expects the data center AI accelerator market to grow over 60% CAGR from 2023 to 2028 to reach $500 billion, which I think was up from the $400 billion that she mentioned, an event before. Looking further into the business, we can see here free cash flow margin, total revenue, and gross profit margin. Gross profit margin in the last 10 years have gone up. It has grown at a CAGR of 4.67%, but we've gone from basically 33.4% to now over 51%. With regards to free cash flow, previously, free cash flow margin was negative. We seem to have peaked at around, let's call it 19-20% or so, Q3 2021. Then it has come down. But at least now we are still in free cash flow positive territory. It's true that free cash flow margin has dropped a lot, but we can see that in the last couple of quarters that has started to pick up, and I fully expect AMD to continue to generate billions of dollars in free cash flow in the years to come. Looking at the different segments of the business that we've spoken about just before, we can see that for data center revenue, since Q1 2023, it has grown each and every quarter. It has basically grown at a CAGR of 95.48% since Q1 2023. The client side of things has grown at a CAGR of 86.1%. But what has come down are gaming and embedded. Gaming is down overall 73.71% since Q1 2023. Embedded is down just over 40%. But as you can see, we are going to have quite easy year-over-year comparisons when it comes to gaming towards the mid to second half of 2025. Of course, client and data center, I still expect some momentum with these segments, so the year-over-year comparisons might not be the easiest ones, but those segments do definitely have momentum. All in all, if we look at the last 12 months, so not just quarter by quarter, but every time 4 quarters, we can see that data center revenue is taking the biggest chunk right now. Then it's client, and then embedded and gaming. Last quarter, revenue came in at $6.8 billion. That was up 18% year over year. Gross margin was 50%. Data center revenue was $3.5 billion, which increased 122% year over year. Now on the right here, you can see the difference between the annual revenue for NVIDIA and AMD when it comes to data center revenue. And yes, of course, comes at no surprise. NVIDIA is the number one, AMD number two, but the difference between number one and two, as you can see, is quite big. And actually, well, NVIDIA has grown faster than AMD. And so right now, looking at the stock, yes, it's a bit in no man's land. It has been in a downward trend for quite a while right now. RSI is low, but on the weekly, not oversold. Even on the daily, it's not oversold. It's not even close to moving averages. The 200-day one sits at 144, the 50-day one at 132, and the 20-day one at $124.82. Of course, like I said before, I fully expect a big move to happen after the earnings report and earnings call. What are the chances that they beat? I think the chances that they beat are quite big. Whether or not the market will be happy with the AI guidance given remains to be seen. But all in all, with the stock being down so much already, with now already a couple of analysts, let's call it downgrading or reducing their price targets a couple of weeks before the earnings report, I mean, sentiment is already quite bad. Valuation-wise, pricing-wise, I think it's very, very cheap. All things considered, right? It's still expect to grow quite quickly, top and bottom lines. It still expect to become more and more profitable in the next coming quarters and years. So yeah, it's really going to be a short-term thing. If they miss AI revenue guidance by a tiny bit, yes, you could probably expect the stock to get hit, unless of course during the earnings call they explain that in the second half of the year, maybe with MI400 in 2026, they already have billions of dollars in demand. That could help definitely the reaction. So all in all, that's about it. That's, in my opinion, all you need to know before making your decision. Do share your thoughts down in the comment section below, like, subscribe to all of that, and I see you all in the next one. Bye-bye.